All right, so the S&P 500 started the week off on a bad foot, and it wasn't like there's been the AI discussion for so long. That's why we were so bullish last week. Today, that discussion changed from AI to yields, and yields had their day in the sun today, and the market responded to a significant increase in yields. And I'm going to show you why, and how that impacted sector rotation and all of that in today's market outlook preview. So let's go ahead and get started. Today is Monday, December the 1st, 2025. This is the market outlook from marketscholars.com. My name is David Settle. Before we get going too far, click this link up there in the top right corner of your screen. That takes you to our Black Friday post. Tomorrow's our last day of our Black Friday sale. You can see you get 20% off of our Elite subscription. Our Elite subscription is a 3-year subscription to our premium services on our website. It's the only way. A premium you can do monthly, you can do yearly, but Elite's the only way to get it for the price locked in for 3 years. And now you get it for 20% off, and that's 40% off of the regular monthly premium rate. Again, if you click this link right here at the bottom to unlock that access, it takes you to our subscription page, and you can sign up for it there and have any questions that you see there as well. If you click this link up there in the top right corner, that will take you to today's blog post. This is for free. This is what it looks like. You get this every day. All of our free subscribers get access to this blog post every day. It's basically a great review of what happened today, why it matters, what to expect going forward. Again, it's free. Now, when you click that link, it will look like this. You have to subscribe for free to get access to it. So click this button. It will take you to this page. This link in the top right corner also takes you to this page. This is our basic subscription. Just fill this out, this form, hit sign up, and then, like I said, you can get access to all of our posts. So when you click on Market Outlook under Market Outlook Video Archives, you can see you get access to all of our posts every day, including this video that you'll see at the top of the blog post every day. All right, let's start off taking a look at the S&P 500 first. So let's pull that up here. So the S&P 500 was down today 0.5%, still above the moving averages. Everything's still fine. A little bit of an oversold momentum line. So technically this is a bullish intermediate confirmation signal, not strong because the intermediate line is not above 80 yet. But it's still, you got dark green shading. So it's still a signal there. It's still a kind of a buy the dip signal. And we'll see the near term line did drop below 80. And we'll see if that pops us up. The one thing though that we see impacting the market today is the breadth. If you look at the number of stocks above the 50-day moving average coming back down. So we had a really good end of the week last week, not a very good week this week. In fact, when you look at the breadth there, we were down. If you look at the number of stocks, like the advanced decline line, it dropped to pretty significant negative levels. So it's not, it's not a strong number. We've had bigger, so it's not a huge concern, but it's the fact that we had a little bit of a drop in breadth today, as both the if you look at the ratio chart here, the SPY, if you look at it relative to the RSP, it went up today. So when it goes up on the day that the S&P is down, because that's not the normal correlation, then it kind of again goes to show that that we really were down on a broad level, much more broad level than just what the S&P itself was. Part of the reason why we dropped so much is because yields fell lower today. So this is one of our bigger drops that we've had in yields, or rallies, but the real yields rallied today. And that's one of our bigger jumps in yields that we've seen in a while. The near-term line crossing the intermediate line, momentum crossing 40, 50, and 60 all in the same day. The momentum lines up above extreme levels. We're well above the 30-day moving average here. So that's a pretty strong move higher in yields. Interestingly enough, usually that coincides with a jump in Bitcoin, but Bitcoin really dropped lower today. So it's, this 85,000 level is a really, really important level. And we had jumped up at the end of last week along, strong near-term rally, but not the case today. Big drop. Now we didn't break the 85,000, but we're flirting with it, and we need to kind of rebound off of this as much as possible tomorrow. But that's kind of goes to show where risk appetite is on the high end of the risk appetite scale. Is ARK investments, which is semi-correlated with Bitcoin, is still below its moving average. Never did get back above it, and was down nearly 3% here today. This despite the fact that Nvidia was rallied. Nvidia was up Now, after gapping down along with Bitcoin and ARK investments, Nvidia finished the day higher as it had a new deal. It's right, it's got all these deals where it, invest in these companies that use their products, so they will continue to use their products. And that was the case today as with Synopsys. Synopsys was the company that, with a bear tag here, benefiting from that deal and getting a nice rally to the upside. But that was really, so you think, oh, that means then that technology must have done really well today, and that we're rotating back into it. Remember, that was something that we were really watching last week to make sure that we were rotating back into technology from a sector rotation standpoint. Wasn't necessarily the case. So here's the move. This is Friday's move, and then today you can see, technology did okay today, but energy was the big winner, and that's a ratio that's not typically correlated with risk appetite. When you look at technology relative to energy relative to technology, again, it's 76% correlated, negatively correlated with the S&P, jumping back above moving averages today. So, it did okay last week, and so did energy for that matter, but not necessarily today. Like, healthcare was down. That's been a big winner. It's down today. Utilities have been down. So that's usually been linked to technology. So it was down today. Industrials were down today, thanks to some negative, worse than expected economic news. Financials were lagging and underperforming, despite the fact that we finished Friday up. So it was actually down quite a bit today. So it was a clear rotation here into areas of the market that we don't necessarily want to be rotating into. It was okay. Technology was okay, but it's not the best to have commodities with yields rising and commodities rising. That's not necessarily the best combination for risk appetite. So not starting off the week on a good foot, and we'll see if we can reverse that here over the rest of this week. But a little bit of a risk-off move today that could suggest that yet last week's rally might not be as bullish as maybe we thought it was. And that's our market outlook preview for tonight. All right, so that does it for tonight. Click this link in the top right corner of your screen. That takes you to our Market Outlook Foundation page. There you can sign up for our Foundation tier Market Scholars for just $29 a month. You get access to the full Market Outlook video. The free version I told you about earlier gives you the Market Outlook video every Friday for free. But the Foundation tier for just $29 a month gets you access to every day of the week, which includes the trades that we do every day of the week in the Market Outlook videos, the Market Outlook Live, which is a live stream we do on our site where we put the trades on before the market closes, as well as manage old Market Outlook trades to see whether we should stay in them or get out of them. And then you also get access to our Market Outlook Trade Tracker, where we track the results of all the trades throughout the year, so you can kind of see how they're doing, how they're performing relative to a benchmark like the S&P 500, for example. Again, all of that just $29 a month, no commitment, so you can cancel at any time. It's a great value considering the value you get out of just those trades alone. As I've said before, a lot of our premium subscribers say they pay for their premium tier with the gains that they get from the Market Outlook trades. So that kind of gives you an idea of how valuable just that Foundation tier is by itself. Thank you very much for watching. Follow me on Twitter at DavidSettle42 for more content between the videos. Have a great rest of your Monday night, everybody, and we'll see you all tomorrow.